Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, once again, the Australian dollar is turned back to the top side and wants to be persistent in taking the market through that 72.60 level. In light of the technicals being somewhat weak, I can only see it if it does break as a stop loss move and trigger a possible move up to around 73 cents and then reverse. So keep an eye on that level just in case that may occur. But overall, I still feel there's a pullback brewing and therefore could be a bull trap above 72.60. Meanwhile, the US dollar gained after the hotter than expected US PPI data reinforced expectations that the Federal Reserve may keep interest rates higher for longer, with the US PPI rising to 0.4% in March above forecasts of 0.2%, while annual producer inflation lifted to 2.3 from 2.1%. Core PPI also came in firm at 0.3%, adding to concerns that the inflation pressures remain sticky. Meanwhile, the upcoming Trump and the Chinese President summit is seen as a key catalyst for many currencies, with positive talks potentially driving further gains, while a breakdown could spark a sharp reversal for the Australian dollar. As I mentioned, the technicals are still lacking support to a bull rally, so I feel there could be a bull trap brewing. While turning to the euro, we can see that there is a somewhat negative play here as the dollar is stronger and therefore backing away from 118 and looking towards the bottom side of the range around 116.85 and a break there down to 116.30.35 and reassess from there. Bringing this line down a little bit, we can see that it's around this potential tops, all these peaks here, and just underneath that bull candle that gave it a further upside move, but now weakening. Let's see if we do get that further slide. Turning to dollar yen, well, the market's in its fourth consecutive up day, and as it's pushing higher, there's still possible lacking of momentum above 158. The technicals are still somewhat lackluster for the MACD, therefore we could see a bull trap, and be aware of this candle in case we do see a potential intervention from the BOJ. Sterling, well, that market is also weaker, and as you can see here, there is still uncertainty when it comes to the UK Prime Minister, which is adding further downward pressure. I'm a bear, and I feel the market from these technicals could head towards 134.5 and lower to 134 and reassess from where all these peaks are. So let's see if the market can find a little bit of support there. Finishing up with commodities, well, the market's gaining, as we can see here, from the break above 4,700, and let's see if it can rally on to 25.55 or even onto 4,800 an ounce as the technicals have picked up. I not like the way this RSI has reversed from this midway point, and the MACD is also positive but weak, but nevertheless still supporting further upside moves. Broadly though, I'm neutral. This is just following the technicals and seeing how they assess in terms of what the outcome could be, but still keeping an eye on this engulfing candle to the bear case. Wrapping up with oil, a little bit of pressure coming back into the market, but nevertheless, $97 still seems to be, or up to 98 as a possible capture before bull trap, but nevertheless, keeping me neutral due to the Middle East and also other aspects in the market. So I'd rather sit out and just continue watching the noise. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest report, and I hope you enjoy the great start to the day.